Thank you for having me. Okay, following Neil's presentation, I'm adhering to Neil's instructions to introduce myself and to do that thoroughly. I am a stockbroker, might not look like one, but I am. I am the CEO of a number of companies, including Business Consultants International. The aim of BCI is to take entrepreneurs through the various steps of listing a company. Effectively, we take them through four steps: due diligence, research, taking them through a set of workshops to identify operational and financial strategies. We then write the business plan that's required to meet King 3, the New Companies Act, and the schedules, the JSE schedules of listing 1 to 21. And then we take them through the listing process itself. I'm director of Anglo's Special Research Department. It's a term. Written 12 financial books, the ones we read on university textbooks. The one obviously that we concentrate on now is a guide to listing of X. Really just two questions that I can answer in half an hour. The first one is, how do you list a company on OLX? And the second one is, why would you bother? And I'm mentioning why you would bother because after Neil's presentation, we all feel a little down. The economy is down. Banks are pretty much crashing in our country. The world markets are finding strain with sanctions against Russia. You have insolvencies worldwide. You have massive unemployment. Why bother? Why bother listing? And the answer is, you list because there's a misconception in the market. That misconception is that the economy dictates how the JSE is going, or where the JSE is going. It's actually the other way around. The JSE is the leading indicator of the economy. And therefore, if you decide whether you're going to list a company or not, you need to look at how the JSE is doing, and more so why it's reaching all these new heights. In the last 6 months, the JSE has continuously reached new heights. At the moment, it's over 51,000 points. Some stockbrokers are saying, well, time for a correction. And they use the word correction not lightly, because it's not going to be a crash. It may correct, if they're not. In my opinion, the stock market will continue to rise and rise and rise. And it is at that point that we need to list companies, because you get the highest value possible for your business when you list at current highs. They ask the question, why do I believe that the market will continue to rise when around us everything seems to be crashing? Because the way the world works in terms of finances has changed. In 1997 through to 2007 and 2008, portfolio managers around the world controlled $1 trillion of investment funds. 80% of those investment funds were in two continents. Asia, meaning the Far East and China, and South America. And when the markets crashed, these portfolio managers withdrew $1 trillion from the markets. And all markets crashed. And now we have the 2008-2009 financial market disaster, and the money is being redistributed. And the way it's being redistributed is by them saying, no longer will we put 80% of our money, of this $1 trillion, in Asia and South America. Let's redistribute it so that there is a fairer, less risk distribution. So what they decided to do is 50% would go into these different markets, Asia and South America, and the remaining 50% in Africa and former Eastern Bloc countries. Now that means 30% more of $1 trillion coming into these two regions. But look at these two regions and how they've performed. We have all these problems with Russia and sanctions against Russia, so former Eastern Bloc countries are kind of iffy. Africa, we've got Libya, we've got Egypt, all problems, and so the money is flowing still into these two regions, but into fewer countries. And one of those countries is South Africa. So we have more and more money coming into our country in the stock market than ever before. And to identify where that money is, all you have to do is look at the daily volume of trades in the case. At the moment, it's between 1 and 2 billion rand per day. And most of that money, 80% of that money, is coming from foreign investments. So, to sum up, if this money is coming into our country, both from foreign investment and from international banks where interest rates are zero, these banks are looking for alternative investments. South Africa is certainly one of those. So all this money is coming into South Africa. The market is continuously rising. You have to ask the question, why wouldn't we list? Why wouldn't you list a property company when you know that the JSE is the leading indicator of the economy? In other words, the JSE is doing well now. In 12 months' time, our economy should be doing better, and so on and so on. So the question then is, how do you list a company? I would rather concentrate on why you list than how you list. Listing is a 6 months to 2 year process. It takes you through due diligence, research, identifying a share price, finding and identifying all the areas that you have problems with in your company to restructure that company before listing. And the problem with AltX is that the AltX committee is made up of a very diverse group of clients. You have the IDC, you have Wits University, you have the JSE, and you have some unions on board. So now you have to meet their perception of what you are about to do. It's no longer just a matter of saying, here's my business plan, and I have a great idea, I will reach certain profit levels within a certain time, and based on the merits, you'll get listed. Now you've got a very diverse. The universities tend to look at your academic side of the project. The unions look at employment. The JSE looks at profitability. And so you have to have a business plan that meets all those criteria. It takes a long time. And the process includes operational financial strategies, investor relations. How are you going to communicate between the board of directors, the investors, the staff, and all of these things? Because the JSE has something called SENS, the Stock Exchange News Service. Everything has to go through that news service. So there has to be a methodology that is an expensive one. King 3 states that you have to have 3 committees. Never mind how the board is structured. You have to have an audit committee, a remuneration committee, and a communication committee. These are expensive things that entrepreneurs don't understand is required as a listed entity. Prospectus. Once you've got a prospectus, you have to go on a road trip. The AltX states that you have to have 10% of your shares in the hands of at least 100 people before you list. Now, once you go through this process, you have 6 months from the time the JSE says you can list to complete all of this so that you can list. And if you don't, you start back at square one. So the question really is, why would you bother? That's why you list on exchange. You make tons of cash, and you do. I know entrepreneurs who are sitting with 30, 40 million rand in the bank accounts simply because they took their companies through to listing. So what I'm going to do today, because I've been given a short time, I'm going to take you through an example. Simple example of a property company, 1,000 square meters, 80% occupation rent, 500 rand a square meter, and the building price is 1,000 rand per square meter. Now, as an analyst, when you look at a company, you say, what is true value today? How do we determine that true value, and what will the true value of this company be in 3 years' time, 4 or 5 years, 12 years' time? With property, analysts look at the worst case scenario. They say, if you've got 1,000 square meters and the value is 1,000 rand a square meter, pretty much your company is valued at R1 million. It's R1 million. How do we determine all these variables? Well, these are the ratios analysts use in the market. They are 7-year average, and it takes you all the way from turnover all the way down to share statistics. The ones in red are the ones that are pertinent to property specifically. If you look at your net profit margin, 28% of your turnover is in net profits. Your rental rate, 37%. Return on investment, 9%. You look at your earnings ratio, 15 times. When you're listing a company, so before you list the company, you have a simple ratio. This is how many square meters you have. This is how much per square meters. If you ignore rentals and it's a brand new building, then pretty much your building is worth R1 million. You could wait a year and get the rentals and increase your value by saying, well, look, 12 months, 500 rand square meters, 80% occupational rate. Remember, 80% occupational rate is being optimistic. You said the 7-year ratio is 37%. So let's just say those are the variables. You end up with a net profit of 1.3 million. So the value of your building, a million rand plus 1.3 million in rentals gives you a 2.3 million value for your business. Now, if you base your earnings on a 12-month period, and as analysts say, you need a discounted cash flow, you take a 12-year period, that would be the value of business, 14 million. That's if you're willing to wait 12 years. Nobody's willing to wait 12 years. And so what happens is we have to take some kind of measurement to say, how do we value this building, this group of buildings, based not on just the value as it stands today, but on a fair and reasonable price-earnings ratio. And that price-earnings ratio, when you look at the market, is only 2.5 times. So this building, effectively, at your 2-year view, is worth 6.7 million. Now, you've got a building that's worth R1 million, you wait a year, it's worth 2 million. You say, well, let's get this prepared for listing, that's worth 6 million. Now, already you've seen how analysts are working. In their minds, the big fact is that this building of R1 million empty shouldn't stand empty. Therefore, take an occupational rent, work it through for 12 years, work it back, see what the true value is. That can be a 6 million rand building, sorry, a 40 million rand building worth 6 million. That's how analysts think. They look at the future, they look at today's negative value, and they try and work out how much money they will make. They don't know how much the entrepreneur will make. And so as analysts, what you do is you say, let's list that 6 point whatever million rand building, and let's see how we can make money out of this. There are 3 ways that you do an analysis on a building to get a value. There's an auction, the auction method, the book building method, and a fixed price method. Around the world, the book building method is used. I'll explain what this is. Once you have the prospectus in your hand, and you've pretty much gone through the rigmarole of going through all the legislation to get your building listed, or your company listed, you then have to have a prospectus. You have to take the prospectus to retailers, stockbrokers who actually will take your prospectus and offer it to their clients. Auction period is when you set a time frame. The stockbroker says, on this date, we will take the lowest price offered for our shares and the highest, and we'll find a median between the two. And that will be the value they determine for your company being listed. Book building is when they say, well, okay, let's send out the prospectus to all the retailers. When we get everything back, we'll take an average of everything. So it's not on a high, low, middle, it's simply an average. Fixed price is that the stockbroker decides this is the price we're listing a company at, and nothing else matters. Whether you like it or not, it's done. South Africans use a combination of these two. They don't use auction at all. They use book building and fixed price. And here's all the ratios you end up with when you're listing a building, a company. You have, what they do is they take a minimum value and a maximum value. What they do is they say a fair value for a business is not 2.5 times P. What we're going to do is we're going to look at the market average, which is on a maximum of 17, almost 18 times. Now think about this. Your building is worth R1 million. We can push that up to 18 million rand on the day of listing. How do we do this? There is nothing there. We've got a building. You don't know how long listing, how long you're going to take to fill that building up, whether it's going to be a 30% occupational rate or 80%. We'll take your chance. As a stockbroker, I have to say, let's take the minimum and the maximum. And the worst case scenario, and the minimum, is the 15 times PE ratio. Now, the sector, the property sector, the retail sector, all of the property together has an average of 15 times. 18 times is the average for the market at the moment. So property is still valued at below the market average. So we still got somewhere to go. We're saying 15 times, it can get to 18 times. Therefore, if we value the building on the worst case scenario, we'll get 12 million. The best case scenario, we'll get 18 million. Let's think about this for a second. But this building was only $1 million. How do you think that this market, this value, that you'll be able to sell your shares in the market? Think about it. Anyone with the answer? Would you be able to sell this building? It's only worth R1 million for 18 million in the market. No? You don't know. The issue is this. When you value a company, you no longer look at it as a product. You look at it as a thing. Stockbrokers will list anything. They don't care, as long as they can make money. They don't care about the entrepreneur. The real fact is, they only care about themselves. Because every stockbroker will take a stake in this, and it's usually between 4 and 6%. The other thing is that they know that they're going to go from 12 to 80 million. Do you think they will hold the shares from 12 to 80 million? They'll sell on day one. It's 12 million they sell. So stockbroking, you've got to look as an entrepreneur, you've got to look at the market as it really is happening. Stockbrokers are capitalists, they only care about this. Now, what you're doing is there's your attributable value, your actual fair value. And there are discounts involved. They get you to an effective PE. In this case, it's a 12 times PE and 8 times PE. Remember, the market is sitting at 18 times. So this company is valued 12 to 18 million based on the discounted market value. So a stockbroker says 12 million rand, this can go up to as high as, look at this value, 18 million, 11 million. If you take all of these out, you can go from 21 million to 25 million. So the essence of a listing is not simply to get your shares out there, but it is to give you an ability to have a mechanism to sell shares into the market, not just today, but into the future. If you go to a bank to raise capital, to expand your company, to buy new buildings, you keep having to do the same thing over and over again. A stockbroking fraternity enables you to continuously go back to the market. Look at these values. Today, R1 million, listed into the 18 million rand. Which one would you choose? Any questions? Sorry, yes, go.
So one quick question, is it based on the same income out of the building?
Correct.
That's not one one.
Okay. I've been through a number of listings. Anything from the Anglos of this world down to a company making less than 12 million rand turnover a year. That company was listed at 12 million rand turnover. Their profit was negative, was a loss. 3 years later, this company's been bought out by Big Brother, absorbed, delisted, and all entrepreneurs are sitting with between 10 and 50 million rand in their accounts. Now, there are other reasons to list. One of the reasons that I haven't mentioned here is focus. You suddenly the focus of the international community. Not just South Africa, everybody sees you listed. And as a listed entity, entrepreneurs and investors know that you have gone through a set of rigorous set of criteria to get listed. So you are the cleanest possible company at listing than ever before. Now think about this. You are a private company trying to talk to a company in France, and they say, do you meet all corporate governance issues? Now you've got proof to them. On the JHB you don't. You have to meet King 3, which states the corporate structure is defined. You have to have a chairman that is independent, non-exec. A managing director that is either the owner of the company, but certainly an executive director. The financial director has to be a CEO. The rest of the company, the rest of the board must make up 25% non-execs of the whole board. These are rigorous instructions by the JSE. So now, suddenly you're forming a company that is structured according to international regulations. And so investment communities certainly out there will find it easier.
How does the Q3 compare to the Oxford regulation from the international community?
It's pretty much based on that. So what King 3 says, you have to have a set of subcommittees that enables everybody to be monitored. The audit committee is made up of one of the non-execs and the chairman. What they do is they effectively look at the MD salary. And so they're trying in a large way to prevent RX from crashing. In the last 8 years, 93% of RX companies have crashed. You're going to ask, why bother listening to RX if it's going to crash? It will only crash if we do the wrong things. Simple as just that. One of my colleagues defined Alt-X, listener Alt-X, as a man saying the wrong thing to his girlfriend or wife. As soon as he says something stupid, instead of saying, sorry, I'll correct it, he digs a bigger hole. Yeah.
Can I just ask you a very fundamental thing to do with property?
Property, yeah.
How does NAV fit into
Okay, net asset value is a difficult concept because mines have much higher net asset value than a bank. And so what analysts do is they say, as long as the asset value can be calculated on a fair, reasonable methodology that you calculate for all companies. And the way they do that is they take the shareholders' equity and then divide it by shares of issue.
I know what NAV is, but what I'm saying to you is that in terms of that flow chart that you have there,
Yeah.
your NAV is 2.3 and your capitalization is 18. Not too bad.
Yes, it is. They actually ignore NAV.
That's the match.
No, seriously, stock brokers ignore NAV. It's, okay, here's the scenario.
I'm going to sit at your table at lunch. I want to hear this discussion.
Here's the scenario, actual scenario. Through the whole process, taking 2 years, 2 companies merged, restructured, King 3, scheduled, all of that. Going through, prospectus done. Sit around the table. What have we still got to do? Damn share price. What the entrepreneur, what would you like the share price to be? 100 cents sounds good. Makes me means I've got 100 million in my
But
account.
these accountants,
These are the stockbrokers determining the share price for the listing.
because the accountants will
Accountants?
say, what do you want the answer to be?
Correct. So, no, but the accountants need to be a part of that meeting. And so the entrepreneur says 100 cents. The stockbroker says, whoa, can we make it 80 cents? 80 cents done. That's the extent to how you get to manage the stock price. And then, they take that 80 cents, then they go to the accountants and they say, look, we're trying to sell this company at 80 cents. The accountants say, 80 cents sounds good, fair value, based on that calculation. But I think you should sell it at 70 cents. Now, why 70 cents? At least 20 cents. Because you're trying to attract institutional investors. Correct. So the investor sits there, first day, goes from 70 cents to 80 cents, and guess who wins? The stockbroker, the investors, the major investors. Because the man in the street, sitting there, sees the share price go up, and he says, oh great, share price has gone up. He doesn't realize that 3 days later, the share price is going to drop when the institutions sell. You have to know how to play the game.
Sure. Now, I want to sit in Irvin's computer laboratory and work out. You know, a valuer is going to tell you, a valuer is a reasonably informed investor, reasonably notified, reasonably available information, making a reasonable purchase. If you've got these alchemists doing these kinds of numbers, and an asset trades between 2 listed funds, which are trading at this premium to NAV, I'd love to see where your cap rates go, sir. Jacques, I thank you very much.
Excuse me, I've got 4 books on activists.
Thank you.
The audience is saying that you're a left-leaning guy. You need to be a bit of a right-winger as well. But can I ask for some more copies?
Yeah, I've got some more books, but
Right, that's okay. I'll bring them back. All right. But thank you very much for Jacques for that financial argument.